NIO stock closed modestly higher on Wednesday, gaining just 2 cents, or 0.29%, to finish at $6.82 per share. After a rollercoaster start to the week, with a sharp 7% surge on Monday followed by a 5% pullback on Tuesday, today's almost flat session felt like the market taking a breath. There wasn't much excitement, and that in itself tells a story. Sometimes a day of quiet trading can be just as revealing as a day of big moves. So, what was actually going on with the stock today? And does this modest rise tell us anything about where things might be headed next? The short answer is that today's calm was less about new optimism and more about indecision. Investors are still grappling with the same macro uncertainty that's dominated the week, trade tensions between the United States and China. But at the same time, after 2 days of heavy volatility, the market needed to settle. Wednesday gave us that, a day where fear and hope found a temporary equilibrium. Let's start with the backdrop. The headlines around US-China relations continue to swing between moments of potential cooperation and renewed confrontation. Earlier this week, Donald Trump posted on Truth Social that the United States wants to work with China and avoid a depression, and that comment sparked Monday's rally. But by Tuesday, new warnings of tariffs, retaliatory port fees, and fresh export restrictions reignited the fear trade, and NIO gave back most of its gains. Now, on Wednesday, we didn't get any major new developments in that story. There were no fresh threats, but no peace offerings either. The market was effectively frozen between those two poles. That's why we saw this kind of sideways action, the calm after 2 emotional sessions. The trade tension story hasn't gone away, it's just waiting for its next chapter. In environments like this, where macro uncertainty dominates, even small hints of tone can move markets dramatically. When the tone is neutral, neither worsening nor improving, you tend to get exactly what we saw today, a quiet day, with stocks drifting just slightly one way or another. It's not that investors suddenly feel confident, it's that they don't know which way to lean. They're waiting for clarity. If you zoom out, this pattern actually fits perfectly with what we often see after periods of volatility. Monday's rally was fueled by relief, traders reacting to what looked like a softer message from Trump. Tuesday's drop was fueled by fear, the realization that tensions might not be cooling after all. Wednesday, then, was the digestion phase. The market needed to test whether support would hold around that 680 level, and it did. Technically speaking, this kind of session can serve an important function. It's where buyers and sellers find a temporary balance. When a stock stabilizes after 2 sharp swings, it suggests that investors are reassessing, trying to decide whether the previous day's moves were overdone. It's also a sign that some traders are waiting for volume confirmation before taking another position. That means we might be in the middle of a short-term consolidation pattern, one that often precedes the next move, up or down. Now, the big question for investors and viewers is whether today's quiet movement was still connected to those trade tensions. The answer is yes, but indirectly. Even though there weren't new headlines, the shadow of the trade war is still hanging over the market. Every investor who's trading a Chinese stock right now is making decisions through that lens. Are things about to get worse, or will they cool off again? When that uncertainty dominates, even the absence of bad news can be enough to keep stocks afloat temporarily. In other words, Wednesday's small gain doesn't necessarily reflect new confidence. It reflects a pause in the selling. Investors are waiting to see if the next headline will confirm escalation or offer relief. Until that happens, we'll probably continue to see choppy sideways trading like this, modest green or red days without clear direction. On the company side, there wasn't a lot of major news driving the stock either. However, there were a few smaller developments worth mentioning. One involves NIO's LiDAR supplier, Seon Holdings, which reportedly received approval for a Hong Kong Stock Exchange listing through a SPAC deal. That's not a direct catalyst for NIO's stock price, but it's an interesting structural move within its supply chain. LiDAR technology is a core part of NIO's advanced driver assistance systems, and this listing could signal growth opportunities for its partner network. There were also reports from local Chinese media about executive departures within NIO's smart driving and autonomy divisions. While not catastrophic, that kind of turnover can raise questions about continuity in R&D, especially when the company is competing heavily on technology. In a calmer market, such reports might barely register. But when sentiment is fragile, even small uncertainties can weigh on investor psychology. So, while not the central story today, those developments contribute to the cautious tone around the stock. Zooming back out to the charts, NIO's price action over the past 3 sessions tells a broader story of volatility and fragility. On Monday, optimism pushed it above the $7 level. On Tuesday, renewed trade jitters dragged it back below. And on Wednesday, it hovered right around that same range, closing just above 680. This suggests that the stock is searching for direction. The market doesn't yet know whether the recent moves were just noise or the start of a new trend. If we think in scenarios, there are a few possible paths from here. Scenario 1 is stabilization. NIO continues to hold above 680, gradually building a base while investors wait for the next macro headline. This would be the healthiest outcome for the stock short term, because it would show that buyers are defending the range. Scenario 2 is renewed weakness. If trade rhetoric heats up again or new tariffs are announced, NIO could easily slip back into the mid-$6 zone, retesting prior support levels. And Scenario 3 is a relief breakout. If policymakers on either side make conciliatory remarks or signal talks, we could see another fast bounce back above $7. Right now, the evidence leans toward the first scenario, stabilization with caution. The market seems to be catching its breath. After the kind of volatility we've just seen, that's a logical next step. So, what's the best way to frame this in a Wednesday aftermarket video? The story isn't drama or despair, it's equilibrium. The theme could be, NIO pauses after turbulent week, calm before the next move. It's about recognizing that flat days can be meaningful too, especially when they come after volatility. They tell us that both sides, bulls and bears, are regrouping. You could open with a line like this. NIO stock closed almost unchanged today, up just 2 cents at $6.82 per share. But after a week of wild swings, that small move actually says a lot. It's the market taking a breath, not ready to rally, but not willing to panic either. From there, the video can flow through 3 pillars: macro context, company news, and market psychology. Under macro, you'd explain how trade tensions still hang over the market even when no new headlines emerge. Under company news, you'd highlight the small but notable developments, the LiDAR supplier listing and the reports of executive turnover. And under psychology, you'd frame this as a reflection of investor fatigue, traders waiting for clarity before committing. One subtle but important point is that quiet sessions like this often come before larger moves. Markets oscillate between expansion and contraction phases, volatility spikes, then compresses, then spikes again. So, the question to pose to viewers is this calm just a pause before the next surge of volatility? That keeps the audience engaged and looking ahead to Thursday's session. In terms of takeaways for investors, there are a few key lessons from today's trade. First, flat doesn't mean safe, it means undecided. The market is still processing risk, and the next headline could easily shift direction again. Second, fundamentals still matter, even when they're being overshadowed by macro noise. NIO's strong delivery numbers and expanding infrastructure are real assets, even if sentiment isn't reflecting them right now. And third, patience is essential. Volatility like this often tempts traders to overreact, but sometimes the smartest move is to observe rather than chase. Looking ahead, what will determine NIO's next move is the same variable that's been driving it all week: the tone of U.S.-China relations. If rhetoric softens, even marginally, the stock could regain its footing and test higher resistance levels. If it worsens, downside pressure will return quickly. Beyond that, traders will be watching for updates on supply chain stability, capital plans, and any official confirmation or denial of executive departures. For long-term investors, these short-term swings are noise in a larger signal. NIO continues to position itself as one of the few Chinese EV brands with both strong domestic demand and international ambition. But for traders, the near-term focus remains all about tone, sentiment, and technical levels. So, the message for today is simple: the storm hasn't passed, but the winds have paused. NIO is holding steady after a chaotic start to the week, and that's not a bad thing. It's a moment of balance, a temporary truce between optimism and fear. As you close the video, you could say, after 2 days of extreme volatility, NIO's flat close today tells us that the market is waiting for the next signal on trade policy, waiting for conviction, waiting for clarity. Whether this calm holds or breaks will depend on what comes next from Washington and Beijing. But for now, stability, even small stability, is a welcome change. That kind of closing gives your audience perspective and keeps them engaged for the next update. In short, Wednesday's session wasn't about action, it was about reflection. A moment of stillness in a week defined by noise. For traders, that's both a warning and an opportunity. Volatility may have paused, but it hasn't disappeared. When markets get quiet after being loud, they're often preparing for their next move. The question, as always, is which direction that move will take. And that's your NIO Wednesday Aftermarket recap.